In a decision that surprised both economists and markets, the Federal Reserve, under Jerome Powell's leadership, implemented a 50 basis point rate cut in 2024. This move, the first of its kind this year, has sparked intense debate over its justification and potential long-term consequences. Powell himself addressed the media to explain the central bank's decision in detail. The main objective of this cut is to maintain economic stability, ensuring that growth is not hindered by monetary policy, Powell explained at a press conference. For months, analysts had warned about the possibility of a recession on the horizon. However, Powell was clear in stating that, despite a slowdown in some sectors, the U.S. economy continues to show signs of strength, particularly in the labor market. One of the key points in Powell's speech was his insistence that the Fed is committed to keeping inflation under control. Inflation has decreased, but we can't let our guard down, Powell said. This cut doesn't mean we're easing our stance on price stability. In fact, we are being very cautious in monitoring any signs of inflationary pressures. Some critics have argued that this rate cut could accelerate inflation, something the Fed has tried to control with more restrictive policies in recent years. However, Powell insisted that the cut is designed to stimulate growth without destabilizing the economy. We know that monetary policy has a direct impact on employment and economic activity, Powell said. Our goal is to ensure that we can maintain sustained growth without significantly increasing unemployment, which is currently at historically low levels. Although the decision was announced as a crucial step to protect the economy, not everyone within the Federal Reserve agreed. One of the figures who opposed this move was Governor Michelle Bowman, who has been critical of any measures she considers rushed. Bowman, this cut could be premature. While economic growth is important, we must also be aware of inflationary risks. History has shown us that cuts at the wrong time can lead to unexpected crises. Powell, for his part, acknowledged Bowman's concerns as well as those of other, more conservative members of the Federal Open Market Committee, but defended the decision, stating that it has broad support within the body. Powell: We understand the concerns, but we believe this is the best course of action given the current economic context. What does this mean for consumers? The effects of this rate cut will not take long to reach consumers. Lower rates typically translate into cheaper loans, which could encourage more people to take out mortgages or refinance their debts. However, it could also reduce interest rates on savings accounts, which is a disadvantage for those seeking to maximize low-risk investments. We expect to see an increase in economic activity in the coming months, Powell noted. Access to cheaper credit should stimulate both business investment and consumer spending, which will ultimately help sustain growth. But some economists warn that history has shown that interest rate cuts don't always have the desired effects. Cutting interest rates can be a double-edged sword, commented economist Bethany Fox. While it can boost growth in the short term, it can also create bubbles in certain sectors like real estate or increase household debt to unsustainable levels. The market response. The market's reaction to the news was mixed. Wall Street, which initially celebrated the decision with a rise in stocks, became more cautious after Powell's statements. Some investors fear this cut may indicate that the Federal Reserve sees a greater risk of economic slowdown. The Fed is walking a tightrope, commented John Green, a financial analyst at Morgan Stanley. On the one hand, they're trying to support growth, but on the other, they don't want to trigger a spike in inflation or create market instability. Lower interest rates also affect currency markets, as they tend to weaken the value of the dollar. This can have global implications, as a weaker dollar can make U.S. exports more competitive but also increase the cost of imports. What's next for the U.S. economy? The coming months will be crucial in evaluating the impact of this rate cut. Powell has made it clear that the Federal Reserve is open to making further adjustments if necessary, but he also indicated that he does not expect another cut in the short term. We are closely monitoring all economic indicators, Powell said. If we see growth slowing more than expected, or if inflation starts to pick up, we will be ready to act again. But for now, we believe this cut is enough to keep the economy on the right track. Analysts will be closely watching upcoming reports on employment and inflation to see if Powell's strategy bears the expected results. Meanwhile, The debate over the best way to manage monetary policy in times of economic uncertainty continues in Washington and across the country. What is clear is that the Federal Reserve, under Powell's leadership, remains committed to using all available tools to protect the economic stability of the U.S. Thank you for watching this video. Don't forget to subscribe to our channel, like the video, and turn on notifications for more VuroBuzz news. See you in the next video.